Thanks for staying on with us. This is Closing Trades. Going good for the equity markets. You've got the bulls that have a firm grip on the markets, and we're scaling new highs, holding out at 15,236. The broader market participation evident as that breadth too in favor of the gaining side. Well, joining in on the show is Punita Kumar Sinha, Managing Partner, Pacific Paradigm Advisors and Chairperson, InCred ANC. Punita, so much to talk about. The fact that the markets are scaling new highs. We had a growth-oriented budget, FPI flows solid, earnings season doing well underway, and you've got that cryptocurrency as well soaring high and how. Let's start off then by talking about that budget, because you said that you expect it to be very growth-oriented, and it seems like the finance minister did deliver on that front. How have you read into a lot of the announcements made and the thrust on infrastructure?
No, I think it's been great, particularly because instead of focusing only on the demand side, we are focused on the supply side. You know, India is supply constrained, and to give incentives to manufacturing, infrastructure, agriculture, anything that is going to be output oriented is good in the long term. Also because, you know, that will lead to better inflation numbers. Of course, anytime there's a big stimulus, as we've seen in this budget, there is always concern of inflation longer term, and then of course rising interest rates. But by giving a more supply side stimulus instead of just the demand side, you manage the inflation a little bit better. And so I think it has been growth oriented, and it has had the right thrust in the areas that we most need right now.
Indeed, and I just wanted to get in your take as well as to how you're looking at the kind of gush of liquidity as well, Punita, that's coming into our markets. Just today you have encouraging numbers with respect to the FPI flows, and it seems like nothing is abating the flows into India. Do you believe that this robust liquidity situation is here to stay?
I think for the moment, yes, because, you know, when I look at U.S. yields, they have fallen in the last 20 years from about 6% to near zero, right? And India, we've gone down from about 10 or so to about 6%. So the US yields have dropped much more sharply. There is no real place for the savings to be invested in other than real estate, equity markets, and things like cryptocurrencies where you can get some returns. And right heading into the US election, I was quite sure that if President Biden were to form the government, then he will have a much better trade policy with emerging markets and developing countries, as well as immigration policies, and therefore it'll bode well for emerging markets. And emerging market valuations were better than U.S. markets. So the reason you're seeing a lot of foreign money also come into India is for a number of reasons. One is the valuation disparity in some cases between EM and US. You're also seeing the better growth prospects from countries like India after the budget. And this liquidity has to find places where they can get returns. At the moment, the growth estimates for India are higher than you're seeing for most other countries, the IMF growth estimates. Again, I'm not saying that they'll necessarily be realized or not, but the growth numbers looking out for India are very strong. The growth numbers in the US are also good, but the valuations in the US markets are not as attractive as you know, and it's all just about liquidity. If you look at the market cap to GDP ratio in the US, it's almost at all-time high. In fact, it's at the numbers that we've seen right around the .com. And it's been driven largely by the top 10 stocks there. If you look deeper, of course, there is value in some areas there too, but there is obviously much more growth potential, much more value to find in emerging markets. And India has been a laggard last year, and this budget only changes that growth trajectory. And also the COVID cases, right, in India have come down. Now it's to be seen whether another phase of rising COVID will happen or not. But at the moment, we don't have an economy that's under lockdown. and whereas some of the developed markets are under lockdowns, and so there is still concern on the when those economies can be fully opened.
You know, like Avan was highlighting, Punita, hi, afternoon. Budget has really been that re-rating for the markets. And, you know, what we're seeing is one of the most historic post-budget rallies that we've had in our history, and I think the strongest of them all so far. As an investor, Punita, how is it that you should now be mapping the markets? Strong as it may be, the recovery from March lows in any case has been quite stupendous, and that rally has continued well into 2021 post-budget, like I said, as well. What next? Do you need to tactically align your portfolios now, move a little bit out of large caps and perhaps deploy higher chunks to small and mid caps, or would you say that it's more of the same that the market would be up to in the next near future as well?
Well, you know, in December itself, right around the U.S. election, I was saying that if President Biden forms a government, then EMs will do well and smaller and mid caps will do better than large caps, and that's played out to some extent. We are in a risk-on trade, right? And so at the moment, I would say still there is value in small and mid caps and selectively, because some companies have still not really performed over the last 5 years. If you look at their trajectory, they're still kind of below their previous highs. And if they are in the right sector where the stimulus has been given in the budget, then you would potentially could see some re-rating of those companies. I think a multi-cap portfolio would be a good bet, because I wouldn't be only in mid and small, but I think there are some good large cap companies as well. Also, I think there could be a shift in some, PSUs might see, and we are already seeing some rebound there. There could be some sectoral shifts. So within like financials, I think there is still a lot of opportunity. I think anything CapEx related, there is still opportunity. And you just have to be a stock picker right now, because obviously the easy money has been made from March lows last year to now, but there is plenty of liquidity. And I think the domestic investors recently have not yet still come back in a big way, right? So that extra liquidity can still come into the market. The only thing, of course, is one doesn't know about geopolitics. One doesn't know what happens if oil keeps going up, right? And then longer term, of course, high fiscal deficits lead to higher interest rates, and those are not necessarily going to bode well for equity markets longer term. But at the moment, it looks like the party is still on.
Indeed. But again, thematically, Punita, where is it that you hunt? Because the March recovery began with IT and pharma, but it's well spread into other areas like home improvement, the paint segment. Now you're seeing a gush of move across the auto segment as well. Specialty chemicals, in any case, was a well-discovered story. So where within mid and small caps would you recommend hunting?
I think definitely, I think in the auto component sector, there are a lot of mid caps that one can research and find. I think anything, as I said, capex related, which includes anything in the infrastructure space as well. Those have been big underperformers for a long time. So there you can find opportunities. Even in financials, I think if you look, there are not just the large private sector banks, there are lots of other financial companies as well in the NBFC space, even in the banking space. So you definitely can find opportunities there. So there actually is opportunities across sectors. Even in healthcare and pharma, you'll find opportunities. So I would say that there's opportunities across sectors. It isn't that we're going to just have one or two sectors perform.
To the IT sector in particular, there have been quite a few large deal wins as well that have taken place, and everyone's talking about this overall digitization of the economy as well. How have you read into the earnings momentum for IT, and do you see this long-term story really play out?
No, I think the IT industry has done really well. in this environment because there's been obviously more shift to using technology globally, and the Indian IT services companies have benefited, and you've said there have been large deal wins. So the momentum is there, the credibility of the Indian companies in the global markets is there. They will not obviously benefit from the domestic Indian recovery the way the Indian cyclicals and the Indian-oriented domestic stories will do. So they won't have that same kind of kicker that we are seeing from the budget. Of course, also, these are secular growth stories. So they're kind of core holdings. They may, or there'll be periods of time they may outperform like we've seen in the last year, but they might even underperform for short periods of time. But they're secular stories given the space that they're in, and as more and more innovation is happening also in these companies, they're going to get into more spaces that are going to be disruptive technologies in the future. So I would still keep allocation to IT, but they will not benefit from what we are seeing in terms of the cyclical recovery in the Indian economy.
Okay, and speaking of that overall cyclical recovery, do you sense that we are likely to see some sort of a shift when it comes to the rural thrust as well, that here is where you're likely to see that outperformance, that demand drive really pick up vis-a-vis the urban?
Yeah, actually that has been playing out over the last, since the lockdown itself, we've seen the agri sector actually, anything rural has done better than the urban, partly because the COVID severity wasn't as obvious there, and also because people are not living as close together in the farms and those areas, and so business activity was quite normal, and also some of the incentives in the budget to agri sector will also help. I think the rural economy has been doing quite well. The latest sowing patterns have also been very encouraging. I think in the urban areas, unemployment has been a bit of a concern. So there was no urban Narega kind of policy to get a lot of people in the urban areas. So a lot of people, while a lot of migrant labor has come back to urban areas, there's still a lot of people in the rural areas that have permanently shifted. Companies in the agri sector, whether it is seeds, whether it is pesticides, chemicals, all of them are also seeing demand growth. We're also seeing, any of the auto companies seeing some demand in the rural area. And I think rural consumption will keep growing. Housing might also do well in rural areas. So that's a sector, again, which I think is a secular story at the moment, unless, of course, the monsoons are bad and, something else goes wrong. That is beyond our control, but at the moment things are chugging along well. Again, I don't think it's like coming from like a low base, and so there is like a huge uptick there. I think it's a steady growth story.
That theme played through as well when it comes to the auto space. How have you looked at the recent steps that have been taken in order to bolster the auto ancillary space, and where does your preference lie within autos?
See, auto is a fairly broad sector. I think definitely the commercial vehicle space is doing well. Even the cars space is doing well, because with COVID, more and more people want to, reduce their reliance on public transportation. In fact, even in countries like the US, the used car market has been really, really buoyant and booming. And we're seeing some of those trends here. We are seeing a lot of people also, I'm looking now globally, shift away from condos and apartments into homes and like further away from populated areas, and so the need for transportation increases as well, and cars and trucks and everything is in more demand as a result. So I think that trend is here for now, and autos has been a very depressed sector for a long time. I think the scrappage policy will hopefully also create more demand for new cars. So I think also valuations in this space are still attractive, both in auto components, automobiles, cars, commercial vehicles, but not every company will do as well. And even the financing companies that are financing to the auto space, I think those also are looking attractive. So I would be invested in this space, but you have to be selective, obviously, on valuations.
Basis valuations and pure fundamentals, how are you looking at the prospects for the engineering and capital goods sector? Do you think that post the budget there is likely to be a far stronger trajectory for growth given the kind of focus that was paid to this space?
Yes, as I said, anything capex related will definitely benefit. I mean, we've had so many years of companies really not investing. The private sector has not really invested in capex, right? So the government is now going to substitute that and is going to invest in infra, is going to invest in agri, as I said, and it's going to invest in growth. So once that starts, then I think the private sector will also benefit, and then eventually they will also start adding capacity. One of the spaces, of course, cement has done very well, but anything again related to infrastructure growth, build out will benefit. So engineering services should do very well, because when you have so much infrastructure spend, then you need engineering services. You also, any companies that are supplying towards this capex are also going to benefit. And there have been a lot of companies that have had very depressed earnings in the last few years. And I think all of that will now see earnings resume because demand will come from the government infrastructure spend. And then eventually the private sector that has capacity to keep up with that kind of demand will start benefiting as well. So yes, I'm optimistic on this space.
Thanks so much for taking time out. We've really covered a plethora of topics from the markets to flows to even the budget. Good to have you on board. All right, so that's Punita Kumar Sinha sharing her views on the markets, talking about how it's the right time right now to be a stock picker. The rural consumption space is really likely to see a lot of momentum, and as of now, a lot of opportunity when it comes to the capex-oriented sectors. Let's take a break. Be right back.